anybody that can hear us. Great, I see a lot of hands being raised, so that's awesome. Great, sounds like everybody can hear us. So real quickly, I just want to talk a little bit about our .org Cafe professional development opportunities in the coffee shop webinars. We started the coffee shop webinars back in June as a response to everything that was going on with COVID. And our thought was, we knew that people weren't able to attend sessions remotely at the time, or it was very hard to get professional development. And we wanted to be able to address some of the challenges that nonprofits were facing in both the fundraising and marketing space. And so we launched our first webinars in June of 2020. And we've continued to do those, and we've been really pleased that we have had a wonderful variety of experts in various fields come and talk with us about a variety of topics that we hope are relevant to you. You can sign up to be notified of our webinars by just going to our website at .orgsolutions.com. So the idea behind these webinars is for them to be informative but relatable. So this is going to be really a casual conversation that we're having with our guests today. So we're going to have a panelist and a moderator. So I'll introduce our panelists shortly. And then we're going to have someone that's going to be monitoring our chat box. So only the panelists and moderator will be visible on the call today. So all of you that are joining us for the webinar will not be able to talk with us or actually be on video. So if you're trying to do that, you're not going to be able to today. But we do want this to be an interactive session. So anytime during the webinar, please use the chat or the Q&A box in order to submit your questions. Our panelists and I are happy to answer questions throughout. We're also going to have about 5 to 10 minutes at the end of the session that we're going to be able to answer your questions as well. So please note that any of the questions that you have are confidential. So I know some people are hesitant about asking questions. We promise we're not going to put anybody's name out there, and we'll be able to answer those questions for you. And then again, please, at any time you can do that. We do thank the people who submitted questions ahead of time, and hopefully we're going to be able to address those for you today. So with that, I want to go ahead and get into talking about our topic today. And this is just a topic that, as our panelists and I were talking, came out of just the experiences that both of us have had during our careers. In nearly 30 years that I've been in the fundraising and marketing industry, I've seen really firsthand the tension that has been felt by both the fundraising and the accounting or business office teams when it comes to the numbers. And you know, both sides have motivation for why they want the numbers to be what they want them to be, and really why they want to represent data the way they want to represent the data. Fundraisers really want to show impact and tell a story, where the financial team wants to be able to forecast, remain compliant, and also, you know, be able to have accurate information that they need to be able to report to the IRS. Both are right, and we're going to talk about that today more in depth, but we also understand that both get frustrated. So today, I want to introduce our panelists. We're going to be talking with Christy Drenner, and Christy is a CPA who is the founder and CEO of Drenner Accounting and Advisory, which is based in Texas. And so, you know, our hearts are out. We know that we had a pretty bad storm here in Ohio, but nothing like you guys are facing in Texas. So we hope everybody, you know, your family and friends are safe and, you know, continue to get any help they need. But we're glad that you're able to be with us today. And we're going to discuss how both teams, fundraising and the business office, can work together to get what they need and want from the numbers. So I'm really looking forward to our conversation. But just a real quick introduction of Christy. She's passionate about serving people and has more than 20 years of experience working with nonprofits and religious organizations. She knows that nonprofit accounting is complicated, but knows firsthand that when everything works efficiently, the difference is noticeable. She believes there's power in understanding what the numbers mean and how they can impact the future. She's worked with numerous nonprofits ranging from large and small churches, child welfare boards, substance abuse and mental health treatment centers, to United Way. She is married to a United Methodist minister, and they serve a wonderful church in a great community in North Texas. And she and her husband are raising 3 boys, which I know I have 2 boys myself. 3, that would make you very, very busy. But they spend plenty of time on sports fields, band concerts, and all the other good things you do with your kids. And they love to travel, watch movies, and play board games, which I'm guessing you've spent a lot of time reading, watching movies, and playing board games over the last few months. So hopefully the travel will be able to open up a little bit. So Christy, welcome to you today. We're glad you're with us.
Well, thank you so much. I was honored when you asked me to speak, and I look forward to being part of the community today.
So I think the first thing I wanted to talk about before we get into the Q&A is, why are we having this conversation today? And so I think it really kind of stemmed from some of the concerns and challenges and conversations that I've had with people over the years in both departments, because in our role now, we talk with both people on the financial side and the fundraising side. And I just thought this would be a great topic to bring up and talk about with someone who specializes on the business side of nonprofits. So I thought we could have a great conversation. So at this point, I'm going to leave a lot of this up to Christy, because she and I have spent a lot of time together last week, really figuring out like what would be the best for everybody today. And hopefully we can answer your questions. So I think the first question I want to talk to you about is really, why is it important for both the fundraising side and the accounting side to work together?
Well, I think that's a great question. And really, why is it important is because the better the organization runs, the better stewards they can be of their finite resources. At the end of the day, every not-for-profit wants to do as much good for the community as they can. And the better you can run on the inside and collaborate between the two departments, I really have seen that it makes a dramatic impact on the ability to provide for your programs to do the good work in the community. Usually as things are, as these two departments that are so vitally important to an organization can work together, it just builds clarity for moving forward, for planning for the future. The less unknowns they are about what the development plan is moving forward, the better the accounting department can forecast and plan and do the things that it needs to do. So I found that the more collaborative it is, the better they work together. It just helps the organization as a whole. And the easy answer too is that, right, the better the departments work, the better reports we have, the better data, the better the systems, the better everything is all around. So to me, it's two of the most important departments that need to really get along and work well together.
And I've always said that once I actually learned, it took me a while in my career to realize what all of that meant, that became like fireworks. There was just some really great stuff that happened when we started to have those really great relationships between the two departments. So I think a lot of the people who are on the call today, I know that we have quite a few fundraisers, but I think we have we have some business office and accounting side folks too. Talk a little bit about what motivates the business office and the accounting department. Because we know that their job, they're not trying to frustrate the fundraisers, right?
Right. Contrary to popular belief, the number one activity of the accounting department is not to drive the fundraisers crazy, although it might seem like that on some days, right? It really just is about accurate and efficient reporting. At the end of the day, the accounting department really relies on everybody else to provide the information they need to do their job well. So they're really motivated by knowing that the details they are getting are accurate, that we're able to forecast on what has been given to us. Because, most accounting folks it's security. It's like a security blanket. The better I feel about the numbers, whether they're good or bad, the better I feel about how I'm doing my job and how I can equip the organization to deal with whatever's coming, good or bad, in the same vein. So I think that is what motivates them. And certainly compliance, larger organizations have all different types of compliance, both from the granting organizations to tax compliance to best practices from the generally accepted accounting principles. So kind of taking all those pieces together and then finding a way to equip the organization so that they have the data they need, that's really what motivates most accounting professionals, I think.
And I think, if we're looking at like what motivates, fundraisers obviously are driven by the goal and kind of the bottom line. And sometimes that just, in what they're being expected to bring in. So I think for fundraisers, really understanding what motivates the business office can, I think, really be helpful to them as they continue to do their jobs as well. So, what are some of the frustrations that the business office and accounting department has on the fundraising of the fundraising department. And we're not here to bash the fundraising department, so please be clear about that as this conversation unfolds.
Yes, no, absolutely. I think one of the things that's frustrating to the accounting department is when there's bad data. It can be a pain to fix something in the accounting system. I always say that, we shouldn't be so stressed out about accounting because it can always be fixed, right? You can enter a journal entry or you can, make an adjustment, but kind of understanding that the more we have to go back and fix things, the more it leads to questions down the road from leaders or auditors about why such adjustments were made. So kind of, getting bad data and constantly having to tweak it or work on it is definitely a frustration of the accounting department. I think another big one would be unrealistic forecast. Kind of to your point, the fundraisers are all about the bottom line and trying to hit their targets. And I appreciate that and I understand it. But as an accounting professional, I would always rather know, we have this projected, but we're going to miss it because of X, Y, and Z that are happening. And so without the communications to the accounting department, they can't pull the levers in enough time to adjust the big picture of how we're spending money if there isn't that communication on, maybe my forecasts are a little bit off, or maybe my forecasts are going to be twice what I thought, right? So it can be good or bad. So that's kind of frustrating when things aren't hit. And I know that a lot of times fundraisers can't always control the world, right? Wouldn't it be nice if we could? So, and then I think the last thing that might be frustrating, or I know is frustrating for accounting departments, is missing deadlines. And so I always encourage people to just have open communications about, like, this is the expectation of when we need this. This is the information I need from you. But just kind of realizing that everybody is a part of the process in the accounting department, whether we feel like we are or not, because that data all kind of funnels through us. So missing deadlines might be the other thing.
And I think, we can talk about those same things. And I think the same things that maybe frustrate the business office are very similar things that frustrate the fundraising office. So I know
Sure.
when you and I talked last week, one of the things that we talked about was, a lot of fundraising departments are frustrated by their own data. So when they're frustrated by their own data, and then you're frustrated, the business office is frustrated by the data, it just really just leads to frustration all around. And that's very difficult. And I think we also talked about, how hard it is for fundraisers to sometimes, create or maybe, admit that maybe a forecast is not what they would like it to be, because whether maybe they have to raise their salary, or they have, maybe unrealistic expectations put on them by a board, or something happens such as a big event is canceled by a pandemic or things like that, where those forecasts are unrealistic on them. And so, they're maybe trying to find ways to, meet their goals, but are just, aren't ready to share that kind of information. So, I think those frustrations are really things that happen on both sides as well.
Oh yeah, I would absolutely agree.
So what are some of the important areas of control between the business office and the fundraising department? This was actually one of the questions that came from one of our participants that's on the call today. And I thought this was great because, there are a lot of things that the accounting and business office are asking the fundraisers to provide, and it's not because it's just something they think they should have, it's something that they need. So let's talk a little bit about some of those important areas of control.
Sure. I know it might sound silly, and it's certainly not a control that you'll find in an accounting journal, but I think communication is the strongest control you have. Just being able to dialogue and talk between the two departments, have an understanding of how processes work. But more specifically, I say clarity is an important control. The accounting department should not be making decisions on where funds go. We are the processors. We are not the ones that decide what happens to the good and hard work that the fundraisers have done. So to that point too, good documentation is critical to having strong controls. I kind of like to think about it like a reporter does, the who, what, when, where, and why. And so if we're going to think about in that scope, as a fundraiser, you want to think of, okay, what kind of information do I need to provide the accounting department so they can process this accurately? So the who of it, who gave the gift. Depending on the size of your organization, sometimes the development office relies on the reports from the accounting department to see what gifts have been processed, what have come in. But, if it is that the development office pushes all the gifts to accounting, making sure that you're very clear about, this is Christy Drenner from Texas, not Christy Drenner from New York, because that's where we get data inflation, right? When we have multiple records for multiple people. So being really clear about who the person is. The what of it, what is the purpose of the gift? Is it restricted? This is very important for the accounting office to make sure restricted gifts are caught on the front end and make sure that they understand what the funds can be used for. So per GAAP, generally accepted accounting principles, part of the role of the accounting department is to ensure restricted funds are used first when it is appropriate. So instead of using our operating funds for our after school program, GAAP tells us we really need to use our restricted funds for the after school program first. So knowing that they're in the funds are in the right bucket and then using them the right way when we see the expenses come through is an important part of what the accounting department does. The when and where kind of go together. It's when will we get the gift and where is it now? So I know fundraisers get really excited because they had an amazing conversation with a donor and they raised $20,000, and we are just as excited for you. But our next question is going to be, show me the money. How is it going to get here? When will it be here? It's especially important at year end, right? Because donors want to be recognized in the proper tax year, and accountants have to follow the postcard rule or the postmark rule. So, making sure that there's communications on both sides about, what the expectation of is when it needs to be in the accounting department so that we can properly give the tax receipt for the year in which the donor wants it. And then kind of back to the last one would be why. So what was the purpose of the gift? Kind of different than the restricted asset, the aspect of it. It's sometimes the accounting department will track development codes or will track campaign funds or track the purpose of why a gift came in. So it's important to know, was this part of a larger campaign? Depending on how your chart of accounts is set, I want to make sure that if the development department got a sponsorship for $2,000 from a golf tournament, that it's going in the right corporate line item, either for that golf event or just golf events in general, or corporate gifts in general, excuse me. So kind of the why of where you expect to see it as the fundraiser is also a good control, because when you're looking at the financial reports, you know every dollar that you've raised, right? So you want to be able to see it and say, oh yeah, well, I know this report, I know this event created $50,000, but I'm only seeing 25. Where is the other 25 living? And so that becomes a good control in the accounting department to make sure that your funds are where you expect them to be. And I guess another piece of that would be journey of the check. What happens when dollars walk in the door? What are we, who touches it? When do they touch it? How do we enter it into the systems? And then, and I think we're going to go into further detail of that, but certainly the strongest control that every not-for-profit should be doing, whether they are small or giant, is reconciliation of the systems. If you have a separate development system to your accounting system, they every month should be reconciled to show we received $1 million in our development system, we received $1 million in our accounting system, because it is the easiest way to steal funds from the organization for someone in the fundraising department or the accounting department, depending on how you're structured, to recognize the donor gave $100 in your development system, send a thank you to the donor feels good about what happened, and then that person pockets that money and it never makes it to the accounting system. If you do not match those two systems, you will never know that there's a difference between the two, and no one's going to call it out because they have been thanked for the gift that they did make.
So let's dive a little more deeply into controls, because this is an area that we actually get a lot of questions about when we're doing some of our consulting work. Maybe we can start with some best practices on some of these areas. And I think journey of the check is one where we find that that process is often actually, especially in smaller organizations, there isn't really a process. So can we talk a little bit about the journey of check and maybe some best practices in that area?
Sure, absolutely. And I think that this is a great example of where it is beneficial to have the development department and the accounting department talk about what that process looks like, because development staff will pre-COVID days, right? Go to an event, collect a ton of money and come back in. So you want to safeguard the resources when they're out in the field and then when they come back into the building. But basic questions about who is going to receive the gifts, who is going to open the mail, how are we going to track the gifts? Are we going to track it on paper? Are we going to put it directly into the development system? Where does the money live? Does it live in a safe? How often do we make deposits? What is a form that I need to fill out? And when you're talking about that form, you ask the who, what, when, where, and why. Is all the details accounting needs on this form? How many hands are going to touch it? And it's great to document all this stuff and really put positions, not names, because Jane's not going to be here forever, but maybe the accounting bookkeeper, development bookkeeper will be. And so it's important that you document and that you write it down and you figure out, is there segregation of duties? You don't want the same person to be taking the money and depositing it into, or recording it in the development system and then doing the deposits. I know most of your organizations are much bigger, so you wouldn't have to worry about something like that, but it is important to think about how can I build checks and balances between the two. So maybe the development office gets a stack of checks, they total them up and they total $10,000. Then they walk those over to the accounting department. The accounting department goes through and totals them up. They total 10,000 too. They sign off on the same piece of paper. Just that little segregation of duties can go a long way to figure out, okay, we do have proper controls. We do have good segregation of duties.
And going back to what you talked about, good data versus bad data, sometimes that actual system of the journey of the check helps with those data challenges that both sides actually see.
Oh yeah, absolutely. And especially because, people give in so many ways now. It's not like it used to be where it was, I went to an event and I gave you a check, right? Or I made a stock gift one time a year. We've got multiple giving platforms online and multiple email systems and development CRMs and everything. So kind of as you have this conversation about how are we going to figure out which Christy Drenner we're talking about, it's kind of, that's part of the piece of the process that helps to keep the data good, instead of garbage in, garbage out, which is certainly not what any of us want.
No, not at all. Not at all. So talk a little bit about documentation. You touched on that a little bit about, kind of the who, what, where, when, and why. What are some additional best practices when you think of documentation that might be helpful for both sides?
Well, I think it is important for whoever's going to process the gifts in the development department to have a conversation with the accounting department so that they know the accounting numbers to use. Kind of back to that, the accounting department shouldn't be making any guesses or any judgment calls, right? So I always encourage the development team to have a slot on there that says this is going to go to revenue account XYZ, or have some sort of master list when you create new programs that says, okay, we're creating these 3 new campaigns and this is where the revenue is going to hit when it comes in. So some sort of tracking mechanism so I can quickly pick it up and look and see, oh yeah, I know exactly where this is supposed to fall on the general ledger. And then I think just safeguarding, as far as documentation, I would say as much detail as you can put on without laboring the system of duplicate information is how I would go. So you don't need to fill out everyone's full details and phone number and email every time you receive a gift. But if there is a way that, you could add a donor number from your donor development database, that'll help the fundraisers as well, just to make sure if they ever want to do an audit to see if things made it into the system the right way.
And I think that's a good point, because I think one of the things on the fundraising side is that, the details that the fundraisers really are looking for are making sure that are the donors' wishes adhered to, are we stewarding them properly, are we making sure that, their gift is being used in the way it's supposed to. So the motivations are a little different there, but by actually talking to the accounting business office and making sure that that if Mr. and Mrs. Smith create an endowed fund for a program at the local food bank, then when you go back to create maybe a stewardship report for Mr. and Mrs. Smith in the next year, it's going to be easy for the accounting, the business office to be able to give you that information that you need so that you can provide that information back to the donor.
Yeah, absolutely. And to that point, if you have this form, for lack of a better term, then that equips the accountants to ask the questions they probably wouldn't think to ask, right? Like, what am I supposed to be asking if I just see this gift come through, that, or, what could I have access to that I could pass on to development that would be helpful?
So let's talk a little bit too about some written protocols for everything. And I'm a huge fan of written protocols because I always look at it, the more you have written down, the less you have to keep in your mind, and less you have to think about. What are some protocols that would be, what are some best practices in some of those protocols? What would some
I
be?
Pardon?
What would some of those be? I know Journey of the Check would be one of those.
I would think it would be, and I guess I kind of wear two hats in this because I have worked with a lot of, systems trying to help people set up the donor side and the accounting side. And so I always think about, looking at what can our system do and what do we want to capture, and then making sure that we have must-haves documented. So if I'm going to create a new donor, what are the must-haves I have to have? I don't want to just put someone's first name and last name. I also have to have their address and email and whatnot, because it's so much easier to get that on the front end when you first get a gift than 6 months down the road when you're trying to do the tax letter that says thank you for all of your gifts, correct? So I think documenting, how you're going to enter data into your system is always helpful. I think in the communications between the accounting and the development department, having an understanding of, the chart of accounts can be nimble, but we also don't want it to make it clunky. So when we're thinking about new fundraising revenue and avenues, that we want to be mindful of, okay, how could we already slot this into something else? And then kind of giving a framework to the development department of, hey, if you want to do this new thing, this is probably the things that you need to think of from an accounting standpoint. Is it going to be annual revenue? Is it going to be corporate? Is it going to be sponsorship? Are we going to tie it to an event? Just kind of having those conversations about what does the documentation need to look like, and then also kind of making sure that you're on the same page about when are you going to acknowledge gifts. That's a really important thing to write out, right? Because you have to be tax compliant, that you acknowledge the gifts. Now you can either do it at the point when someone gave it, or you can wait till year end if it's over $250 for the whole year, that you acknowledge at that time by January 31st of the next year. But you don't want to create a fire drill for either department when you figure out, oh, wait, we really have to be doing this and we haven't been thinking about it. So I guess just clear expectations about how you're going to communicate the gift receipt acknowledgement, I guess is the best way to say it.
And then the one other thing that we talked about quite a bit last week, was reconciliation of systems. What are some of the best practices? Because as you mentioned earlier, the fundraising system may be completely different, and often is very different than the accounting systems. And so information might be pulled differently.
Sure. I would say early and often. So just pulling the reports, not often, but at least once a month is a best practice. And so I think that, we each speak our own language, right? The fundraisers have all these campaigns and use reasons for why people give and types of gift and how they gave. But at the end of the day, almost all systems will allow you to pull some sort of report that says from January 1st to January 31st, this is every dollar that walked in the door. Now, that is the most basic and important tie out, right? Like if I looked in my accounting system, then I could see what is the revenue line items that tie directly to fundraising, and does that dollar amount match? Now, the next question would be, okay, what about my restricted funds? So kind of back to that whole communication of when you decide to start new initiatives or new ways of tracking people, having that conversation with the accounting department that says like, okay, we're gonna have a gala and we're gonna raise $1 million for our restricted after school program. You just want to make sure that you tell the accounting, okay, as this money starts coming in, I want it to go here, but on my my fundraising report, it's going to look like this. And so the more consistent the development team can be with when the dollars come into them, putting them in the buckets that make sense, that's going to make it easier for the accounting department to say, okay, these 10 things I know to go to this one line item. And more likely than not, you might have different ways people give, but you're not going to have different reasons why people give, right? Like you're going to have, a handful of campaigns, but, I think that the more you look at it, the more you work at it, the more you think about it, you can take whatever development's doing and tie it to whatever accounting's doing and make sure that you're on the same page.
But it all boils down to communication. So that's been
Yes.
a common theme. And I think, the biggest thing to develop this healthy relationship is about communicating. So what are some of the ways that open communication between the two parties can help both fundraising and the business office?
I think they can help in unexpected ways, right? Because we always think about the accounting department as the one beating me down for information, or at least that's what I've heard. And then the fundraisers kind of have unique ways they put the numbers together. And so sometimes it's a little frustrating between the two. But I think that if we really think about what are the skills that both sides gives, then we can see even more value to open communication. Grant writing for one. Fundraisers are always thinking about, how can I tell the story to get this grant so that I can help the good work of our organization? Well, behind that usually comes obligations for how you report back to the organization. There's sometimes grant requirements of saying, I need to have quarterly reports or annual reports, and I want to see that the funds were spent in such and such a way. The more you can give the accounting department a heads up on, like, this is what we're going to need, then the accounting department can make sure that they have the chart of accounts set up in the right way, or the way that gifts are processed or the expenses are processed in the right way, that they can just say, okay, here's the report that you need for when you need to report back to the organization for a year from now, because you want to go back to that organization every year to get the same funds, right? Because it's easier to have a grantor than find a new one. So that's one way that I think both can benefit from that. I always say that there's no such thing as an accounting emergency. I mean, there are occasionally, but as much as you can do to prevent them, that is great. And I think communication certainly helps with that. Um, but I think another way is donor reporting. So fundraisers are telling the story of the work of the organization, right? And so the accounting department sees how the money is being used. It's seeing what we are putting our dollars behind and our mission and our vision, and if they align. And so I think that they can be a resource for the fundraisers who are telling the story to say, listen, 2 years ago, we spent 25% of our resources on the backpack program. Well, because of, faithful stewardship and, our vision being, focused on this, we're now up to 50% of our annual budget is spent on the backpack program. So that translates well for the fundraiser to be able to say, like, we're not just saying we're doing this thing, we really are doing it. And here are the numbers that back it up. Not saying that the fundraisers don't have their own numbers, but I think that it just, if there are trends that the CFO or the accounting department can see, they can kind of have those conversations about, where are we really spending the money?
And I think there's a really good point on that for the donor reporting, because, and you talk about trends and forecasting, and I think a lot of, especially grant funders and even, individual donors are becoming a lot more savvy in what they're asking for. And so they're not asking for necessarily just the numbers of people that have been served or treated or helped in any way. They're looking at impact numbers of, okay, so yes, you helped 10 more people, but, you needed to provide 50% more revenue to support that because maybe reimbursements were down for a particular service, or there's some numbers I think that the finance departments can really share that I think are beneficial, definitely to fundraisers.
Well, and that's a great point, because a few years ago, the accounting standards changed for how annual audits the liquidity section. And so now funders, part of the reason was the users of the financial statements were finding it frustrating because it was hard for not-for-profits to compare apples to apples as far as how much available cash they had. So one of the changes they made was the liquidity disclosure. So in that, it really gives you a snapshot of how much cash do you have should some emergency arise, or how nimble can you be in changing things. And so I think that could be an asset to the fundraisers when they say, listen, we are a strong organization, have that conversation with your accounting people. How can I show to these granting organizations that we are fiscally responsible, we are solid and how we are doing things, and really point out that we have paid attention to the importance of these key metrics, because they're savvy, the grantors that are giving the money, right? They want to see that you're going to use their dollars well and know how to use them. So I think that that can be a great relationship to build, or a benefit of the relationship.
So let's talk a little bit about, processes and procedures. We talked about those earlier, but I think those are some really great, communication things that when the two departments communicate well, you can develop some really amazing processes and procedures that benefit, that are really good for both or both sides of the organization.
hmm So I think that it's a great relationship, because accountants tend to be very linear in their thinking, and like step one, step two, step three. And I think that development people in general are better at thinking about the big picture and maybe how the system might impact the organization or might impact the story you're telling. And so I think that when either part gets to that point where they're trying to do something new or something that isn't so comfortable to them, that they can really rely on each other to kind of build on their strengths to create something that's good for the organization. So procedure development is definitely one of those pieces where I think collaboration can be helpful.
Well, and I think you make a really good point there is that I think oftentimes I think the frustration comes from you do have fundraisers who are thinking really big picture, and you have the accounting side that are very linear, and the one is expecting the other to think the way that they think, and that just isn't probably going to happen ever in this lifetime. But understanding that could probably lead to some pretty amazing outcomes, I would imagine.
Yeah, and I think what, kind of a side note to that is that the 990, which is the tax filing that each not-for-profit has to do every year, and the audit report for that matter, they are at their heart financial documents, but they tell the story of your organization. And who is best at telling the story? It's the development department, right? Because that's what you do all day, every day. And so I think kind of to that communications and process and all that is, understanding that there's so much good stuff in a 990 as well, that can help the development side, and then the communication of the vision and the mission can help with the accounting department when they have to fill in those blanks. And so I think that it's just another avenue that when there's that alignment, you can just use every resource at your disposal to tell the story.
So this is probably a good time to go into to talk the importance about working together so that you both get what you need and what you want, which is kind of the heart of this whole conversation we're having today. And one topic that I've brought up over the years, and I've seen the business office folks cringe at this, is there's a difference between counting and accounting, and neither are necessarily wrong. And we go back to the motivations of the accounting department needs to make sure that things are properly accounted for, right? Because you could get audited and that could create a big mess for the organization. But the fundraisers are also looking at counting things in a way that makes sense. So maybe talk a little bit about, the counting versus accounting and kind of tracking numbers from the beginning, and how can you maybe get to an agreement before you go down the path where both of you are frustrated at the end.
That's the $1,000,000 question. We'll be back next week to answer that. No, I'm just kidding. Because that can be one of the most stressful things. And I think that it's really, I think it's important to remember that your donor is seeing both, right? The savvy donor has read your 990, has looked at your audited financials, and they're seeing all the marketing and development pieces that you're putting out there. So the importance of being aligned on this, I can't stress enough, because the better they are, the more faith as a donor you have in that organization, right? That you're not getting, sold something that isn't true. And so I think that it's important to remember and to understand on both sides, how are we going to track multi-year pledges? There's new accounting rules for revenue recognition. If you're an organization that gets grants, that if the grant that have just come into play the last couple of years, if you are receiving a grant, there are ways that it is now considered a revocable grant. And if it is such, you can't book it in the same way that you could all these years past. So kind of talking to your accounting person to say, like, has something strategically changed about this? What will this look like on the financials? But, the accounting department also has to be mindful too that, you all think in multiple years. You don't think in 1 year. Accountants rarely think in multiple years except for when it comes for forecasting. But it's important that there's kind of back to the documentation and the good questions asked at the beginning. If you got a pledge, if your organization books pledge receivable for 25,000, does that mean 5,000 over 5 years, or does that mean 25,000 over 2 years? Those kind of questions that you can answer if you're doing pledge booking are so important, and kind of clear up some of the misconceptions and communication. Um,
So, I always think about like larger campaigns when I think of where a lot of those counting challenges come into play. So, you do have thresholds that, the accounting departments have for, counting pledges and, minimums and maximums and how many years they'll go out. And, with these new accounting rules for revenue recognition, if somebody has a large scale campaign and let's say a grantor has a revocable grant, well, the fundraiser is going to want to count the whole grant in the time that it was pledged, but those numbers are never going to reconcile because the accounting department's not doing that. So, I think that this is one of those accounting versus counting situations where there has to be some really honest and ongoing conversations between, the fundraising department and the accounting department as to, how can you make sure that you're agreeing to maybe not agree on paper, right? Is that an okay thing?
Yeah, that's a perfectly great way to summarize it. And I think that, part of it is education too, right? So to your board, to your leadership, to your CEO, to say, this is why I can't count it in the same way that the fundraiser can count it, and feeling comfortable with it. This is why we have a disparity between the two. It some things you just can't avoid, right? And it's not wrong for the fundraiser to say, I've collected this pledge over 3 years, but it's just not something we can book in the financials.
So we have about 5 to 7 minutes left in our session today before we take questions. And please put your questions in chat or Q&A. We would love to be able to, give Christy as many questions as we have. And this is a great opportunity to get some free accounting advice for those of you who might need some or want some. But as people put questions in the Q&A, hopefully, I want to ask you some final tips. So what are some final tips that you would give on building relationships? And I think these are for both sides, not just for the finance people or the fundraisers, but on building really strong relationships between both the departments.
Yeah, I think that's a great question. I would say regular meetings are a must, whatever that looks like, whatever makes sense for your organization, to kind of have some touch point every so often to say, hey, let's align, let's make sure we're on the same page about this, outside of maybe when you're sitting in the boardroom reviewing financials with everyone else, because nobody likes a surprise at that time, right? I think fundraisers, it's helpful if they have a basic understanding of accounting, kind of how it works, what do the reports mean, and being able to ask those questions is important. But at the same time, the business office, the accounting person really needs to have a basic understanding of fundraising. The better we understand the kind of, to your point earlier, the motivations of each department, the better we can communicate and the better we can achieve both of our goals. And I know that sometimes it's easy for us to forget because we get siloed because we're so busy on our particular piece of the puzzle. But if you are finding, we've talked a lot about communication. It's easy to say it's the magic wand that fixes everything, but maybe we're not in a situation where that's the case, or it's hard to think about, how do I move past this one person that I have to work with that I struggle with? And so I think that if you spend a few minutes, what I encourage people to do is spend a few minutes asking them, what inspires you to work here? What inspired you about the organization to join it? Because I think that if we remember at the end of the day that we're all working towards the same goal of having the most impact on our community in a positive way through the good work of this organization, it can really go a long way to kind of breaking down the barriers from the day to day to feel like, oh yeah, we are part of the same team doing the same work.
And I think that's such a great way to look at it too, is that, I think oftentimes when we get frustrated with someone, we we're just frustrated with them, and we forget really what the big picture is of why, what is our why and why are we doing this? I don't think anybody who stays in the nonprofit sector for any period of time, let's put it that way, doesn't have a real passion for helping people. And I think sometimes, we all get so busy and we have so many things that are being asked of us, and we have, our staffs are lean, our budgets are lean. But sometimes it does help all of us to step back and think about the good that we're really doing in the world. It's interesting. I have a post-it that I have to keep myself in check, because the work we do, like you, is mainly with nonprofits. And so, if I'm having a rough day, I think I always think to myself, what did we do to make a difference today? And I think that that's a really great way to approach that and continue to build those communications. So we do have a question. I think this is a really a great question. Can you clarify the postmark rule?
Oh, sure. So if you are going to make a year-end gift, it needs to be postmarked 12/31, whatever year, to be able to be counted for the year that you are ending. You cannot post date a check and say that that counts as being a gift from the previous year. What a lot of organizations will do is they will send out communications that say, hey, the last time to turn in your year-end giving is noon on December the 31st. And so someone is sitting at that desk, because you can't always make it to the bank, right? Or maybe it's 3 o'clock, maybe it's 4 o'clock. So sitting at that desk, Mary writes down that I got a $100 check from Christy Drenner. That counts as documentation as well, that somebody is saying, yes, we did receive this gift. I have signed for it. I have an accounting of it. It totals $10,000, the total checks. And then on January 2nd, I can see where $10,000 came in. So the postmark rule is just that you have to have a postmark on an envelope that says, this is the date that came through the mail. If you do have gifts like that, keep the envelopes, because that's the way you prove that you have met that.
That's different for a check, though, than it is for a credit card, correct?
Correct, because
I was going to say, because a credit card, even if it is postmarked by December 31st and it's not processed until January 2nd, January 2nd is the gift date.
Right. And so you'll rely on the electronic system for that. One other important thing related to year-end gifts and communication is sometimes donors want to give complex gifts at the end of the year, like stock gifts or whatnot. And so you need to make sure that you have given your accounting department the heads up that, hey, this gift is coming, or, talk to them ahead of time and say, if I do get a gift like this, what's the last day that we can accept it? Because the last thing you want to do is have a donor that gives you $10,000 worth of stock gifts and you can't count it until January. Looks bad for you, looks bad for the organization, makes the donor mad. Nobody wants that. So
to take that question a little bit further, how important is it to have, gift acceptance policies that guide us? We talk about policies and procedures, and those are more like kind of day-to-day that, the check comes in and this person opens the mail, this person does this, this person does this. Gift acceptance policies can kind of help eliminate some of that murkiness as well too, right?
they can save your banking. I wish we had thought about that earlier when you were talking about documentation. Yes, because it empowers the development person and the accounting person to say, like, I appreciate that you want to give us $5,000 for this thing, but that's really not in the scope of what our mission and ministry is. And so to prevent scope creep, documentation of these are the reasons why we take gifts or the programs that it's for can be super helpful. Another part of that is critical as well is that, let's say that you had a large restricted gift and you couldn't spend all of it. If you have a well-crafted, well-written gift acceptance policy that says, you're agreeing to the fact that the organization will do its best to spend the money to its restricted purpose. And if X amount of time has passed and we are not able to accomplish that, it will go into the unrestricted funds bucket, for lack of a better term. that saves you from having restricted funds that you just can't ever spend because you don't do that programming anymore. So I'd highly encourage you, if you don't have one, work with a professional to get one, or find the best practice from somebody else that's a similar organization, and put it in place.
And I will say, I've used over the years gift acceptance policies, and we've developed them for clients. And one of the things that I always tell them is that when we had really solid policies, it was really great to be able to refer to that policy so there was no murkiness. So if a donor is asking you to do something, it was a lot easier to say, according to our gift acceptance policy, which has been approved by our board, we don't accept these gifts for this reason, or these are the only types of gifts of this type that we accept, or in order to accept gifts like these, we actually need to work with our gift acceptance committee to be able to do that. So, gift acceptance policies, especially ones that you can blame it on the policy as opposed to blaming it on a person or feeling like you have to go, toe to toe with a donor, is really important. So. We have another question that has come in, and this is actually in regard to how do you book pledges? So there are two schools of thoughts on this, and this is a really good question. What are your thoughts on booking pledges on financials when the pledge is received rather when the cash is actually received? You see them both ways, and I think this might go to an accounting question as well.
I think it depends on your organization, what makes the most sense, how reliable are the pledges, what has been the history and the collection rate for those pledges. Part of it I spoke to earlier about, depending on the size of your organization, some pledges can be counted per accounting rules and some literally cannot. I mean, for example, I doubt there's many churches on this call, but a lot of churches do not book pledges as year-end pledge campaigns that they have, because it's not a contract that somebody has signed saying that they will officially make this pledge. It's just, kind of in good faith or what they had done previously. So I think a lot of it depends on your organization. I know that's not a helpful answer and probably not the one you wanted, but that's kind of how I would go about it, unless you have more wisdom, Amy.
Well, I mean, I think you're right. It's a good question. I mean, if you have, I think it does depend on a relationship that you may have with the donor. So if you have a donor who comes out of the blue and says they're going to pledge $100,000 to you, and they're going to pay the first payment in 6 months and the next payment 6 months later, yes, you may want to put it in your system as maybe a pledge on the donor system side, with the caveat that it may be just a conversation again that you have with your accounting office or your business office, as opposed to actually putting it on the books of the organization, because those are booked as liabilities unless I am incorrect, and that can really kind of mess with the balance sheets of
receivables.
An organization.
It's booked as receivables.
It would be receivables. Yeah. Not really, I'm sorry. It would be booked as receivable, which can really mess with the balance sheet of an organization and really can cause problems for the forecasting of the organization. But I would say if you have a donor who has historically given you, $100,000 every couple of years, and that in good faith that you are going to get that money, that may be a whole different conversation that you have. But I think that you're right, it does depend.
Well, and now automatic gifts are such a big deal online. So if you had somebody that was making a recurring gift, I could see where you could book pledge receivable or gifts receivable, because you can see physically the stream of gifts of when they're going to come in and how much they're going to be. So it'll kind of help you forecast and plan your cash accordingly.
Absolutely. Well, Christy, thank you. This was such a great conversation today. I'm sure that, like many people do when they're done hearing conversations like these, they're like, I don't have a question now, but, they may have a question, in 30 minutes. Hopefully we can be able to answer those. If you do want to reach out to Christy and or me, well, first of all, actually, I'm going to tell real quick about our upcoming coffee shop webinars. We do have an upcoming webinar on March 16th, and that one's going to be about aligning your fundraising and marketing plans for maximum impact. You can go to our website at .orgsolutions.com, learning, to view past webinars and also register for those in our monthly newsletter. But if you do have questions for either Christy or me, our information is on here, and we'll leave this slide up for a few seconds so that you can get that, or you can reach out to us at .org Solutions, and we can provide information to you, and we can answer your questions that way. So, but again, Christy, thank you so much. I learn a lot every time I do these webinars. I really enjoy the conversation. And I, again, hope all of you are safe and everything returns somewhat back to normal for everyone down in Texas.
Thank you. I really enjoyed our conversation as well, so I appreciate you inviting me.
All right. Well, thank you, everyone, and we hope to see you on our next webinar. Have a great day.